Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. We got Quentin from Durham REI back on with us, Quentin D'Souza. Today we're going to be talking about our house prices too high. Now, I apologize, we may deviate into different topics here, but it all really comes back to the one thing. Should you be buying real estate right now? Are we buying real estate right now? Yes, I know I'm a realtor. Realtors always say to buy, but to be honest with you, I'm putting my money where my mouth is right now. In the last month, 2 months, I've purchased $5.5 million worth of real estate. Quentin's purchased a heck of a lot more than that, probably close to $15-20 million in real estate. So, judge what you'd like, but we're kind of putting our money where our mouths are. But listen to what we think and how our thought process, and this is kind of a conversation of how and what it looks like when we get together and kind of what we do. All right. Enjoy, everybody. Thanks for liking and subscribing. All right. So, Quentin, we're here today. We're going to be talking about our house is overvalued. I was on your Durham REI call. What was that, Wednesday night?
Yeah, Wednesday
night. And you had this poll. You had some interesting facts. I went and delved down in some more. Oh, look at that. You were ready, weren't you? You were just waiting to put that up. I thought you were going to be good this time. You promised me.
No way. You said I could be me.
That's true. So yeah, our house price is too high, right? In Canada. But basically we're going to go through and we're going to compare the price of houses to, say, other things, right? Other goods, services, whatnot. So let's get going. There's gold, right? That looks like a funny gold bar. It looks more like a coffin. Is it a coffin, or are we talking gold bars? Because the price of coffins probably went up more because of the price of lumber, right? So
yeah. So what you're talking about is this chart here that we were looking at before, right? So the idea behind it really is that what are you comparing house prices to? And if you compare it to different things, you would probably end up with different results. I mean, you really got to think of what it is that you're doing your comparison to, right? And that'll make a big difference. The other thing is when you're thinking about it, you're thinking probably in dollars, right? That's what everybody thinks about, in dollars. But what if it's not necessarily that the house prices are going down or going up, but it's the value of the dollar going down, right? So if you look here, this is back in 2020 up to 2021, we had almost a 20% increase in money supply. That's huge, right? So that makes a big difference when it comes to the cost of everything.
But no, I mean, so the money supply, that's up what, 20% in the last year, right? Or
yep.
15, 16 months type thing. Like it's kind of hockey sticked, right?
And that's huge. So if you want to think of it differently, think of it that the value of the value of your money has gone down.
You can see that obviously the money supply has gone huge, and then the average house prices has done very similar things, right?
Yeah, I mean, if you take a look at that and you compare that to the money supply, and you look at it back from 2017 to where we are now, we've got that increase in money supply, right? Yeah, I think that when we think about house prices going up, right? Is it really going up, or is it the value of the dollar going down? And the way that you would do that is if you compare it to different things. So if you have money, and then maybe you compare it to gold, or you compare it to wood, or you compare it to whatever it is that you want to compare it to, you can see by doing that some really interesting things. One, if you look at, so what I did was I compared it to gold, right? And we look at, what it costs gold wise, as per ounces of gold. And I use the average house prices in Oshawa at the time, and that's what I used as my comparison. And, you know, I look back to the year 2000, 2010, 2015. And, you know, what's interesting is that if we look at, you know, 2010 and 2015 versus 2021, you know, we're actually seeing that that there is some value there. And even the cost of, you know, 1,000 board foot of lumber, you know, back in 2010 and 2015 versus today, you know, it's really interesting to see those type of comparisons. And when we make comparisons like that, maybe house prices aren't too high. Maybe what's happening here is that we have a supply issue. And I think that we've always, one of the big things that we tend to talk about is, you know, rents and house prices, but really we have a bureaucratic issue, right? When it comes to supply, we have lots of extra additional costs that come from the bureaucratic process. And we have like a lot of hurdles that you have to get around in order to increase supply. And it takes years and years for supply to come on. It's not like in Canada, like, you know, in some places I've seen, like in China.
Okay. I'm just going to put the brakes on that comment there, because if you go to Alberta, you can get stuff approved in Edmonton. This is what scares me about Edmonton, by the way, is you can get stuff approved and be building in 2 to 3 months.
Yeah, see, that's crazy, and it always depends on the area. And you took that to Toronto and make that 2 or 3 years, right?
Yeah. And like, I don't know what their development charges are in Alberta, but I'm gonna guess that they're not 40 to 50 to 60 to $80,000 per unit.
Yeah, it's really crazy when you look at the numbers and the cost that's associated with that. And
because everyone correct me if I'm wrong, because I'm probably going to be wrong, but I think Toronto's $100,000 development charge
per unit.
Per unit.
Yeah, it becomes like a point of ridiculousness, and in the same breath they complain about rents being too high and house price. Well, increased supply. And it's truly reflected in what's been happening in the last few years anyways. Look at what happened to Toronto during COVID and the amount of units that came on the market. Rent prices went down in condo units. Why? Because it's a supply issue. It's never been anything else. All these like,
well, I mean, that was a demand. The demand dove down, right? And obviously supply stayed the same, but demand dried up. So therefore there was fewer people chasing the same goods. Therefore they were able to negotiate better pricing, right? When you get more people chasing the same goods, then they're going to, you know, then the supplier is going to have the upper hand and they're going to be the one being able to negotiate better pricing.
Yeah, I mean, and there was also the changes to the like short-term tenancies, Airbnb stuff that brought a lot of condo units back onto the market as well. And then a lot of people who are selling because of that. So again, supply, more supply, right? So I think that what ends up happening is it becomes politicized. And truly, if we really want to solve the problem, it's a supply and demand issue. It's not like so academic that needs, you know, you have to have university professors come in and explain the, you know, 6 million ways that like housing is not a supply and demand issue. Like it's very simple, you know, when it comes to rent prices and house prices. So, you know, and if you want to change that, increase the supply.
So can you kick up your graph again about the Durham home prices and just make it like maybe just share full screen?
Yeah, sure. So if we look at the compared to what, right? You know,
so I mean, I here's the thing, right? You do that 2000 number to 2021 dollars, right? That's dollars in circulation, right? Per What's that per, like, per person?
So that's an average house price in
Oh, that's
Oshawa
the
at
average
that
house
time.
price. Okay.
Yeah, yeah. So that's an average house price in Oshawa in the year 2000
Okay.
versus the year 2021.
Right. So it's gone up, what's that, fivefold? A
Yeah,
little bit less,
yeah.
four and a half ish. And I mean, it went up in 15 years, it went up twofold. 10 years went up twofold with a little bit more in 2015. And then obviously the last 6 years, anybody who's invested in real estate's looked like a genius. It went up two and a half times. Um, but like, and obviously you can see the gold prices, like that's 500 to, so it's cheaper to buy gold right now.
Yeah, versus what it was before, but it's more expensive than it was in 2010 and 2015, right? But look at the lumber costs, right? I mean, it's actually cheaper. Now you might be
That's 20,
surprised
that
by
is
that.
2022, right? Like that.
Yeah.
Yeah.
And this price is actually January 1st. I took January 1st, 2021. And
Okay.
so that price might be a little bit lower. But I mean, it's all relative. It's always, what you're comparing anything to that gives you that, those numbers.
Yeah.
Um, and like our house prices too high. I mean, one thing that we may want to like keep in mind too is that it's more than just house prices. It's also like Canadian producer prices, right? Yeah, so like look at that. Look at like producer prices in the last year, how much they've gone up, and that's
Well, that's
just
not
in
even the last year. That's like mainly, well, it is last year,
2021.
but even 2021, it's
Yeah,
gone from like 104 to 111, right?
yeah. So we've got that. We've got so from 100 to 111, and then
Yeah.
really if you go back to 2020, it's higher than that. So producer prices have gone up, right? If we
So
think of
basically what that means for everybody out there is that for people to get either the raw material or wheat or whatever they're growing or mining or harvesting, say lumber, or that, it's costing them more to get it to either market or to wholesale or whatever they're doing it, their costs are going up. And that is, in my mind, base inflation.
Yeah, exactly. We're seeing inflation well beyond the amount that's being published in the CPI. We when I look at the CPI, I know that it's a basket of goods and they switch out and switch in goods, and it doesn't include a whole bunch of the things that we use every day. And although, inflation may be 3% in the CPI or even 4% in the CPI, the real inflation rate, what I feel in my pocketbook every day, is more like 10 to 15%.
Well, I mean,
So
let's, like, China came out with their numbers, it was over 5%. US numbers the other day were over 5%. I'm just going to liken this to, so 2008, 2009, they did flood the market with money. It went into the bank and the banks held it and basically held it for security and didn't lend it. This time around, the bank's like, oh, we're all still good. We can have tighter restriction and lend to people who actually have jobs this time. And they went out and did that, and the government gave out free money and gave out small business stuff, um loans, like, so there was a lot of money floating out there, and it got transferred out this time. So when back in 2008, 2009, 2010, people were worried about the inflation of this because when you put that much money into the economy, when you print that much money, then obviously the cost of goods go up. And we didn't see that in 2008, sorry, 2010, let's call it, after the whole thing was done, mainly because the bank sat on the money. They didn't distribute it. This time the government went straight to consumer, straight to small business owner, and the banks got in the game too and said, okay, here's free money, which I'm still partaking in. I just got a 1.4% mortgage on one of my properties there, right? My new condo rental. Anyways, but like, you know, that's so that scares me more than anything, I think, is that and like when you look at that compared to house prices, and you're seeing, okay, 10 to 15% inflation, if that's the true number, not the quoted number, which I kind of feel that as well. You know what, like, our house prices, again, too high, right? Come back to that simple question: are house prices too high, right? Like, I just did a video on, should I sell my primary residence and rent?
Yeah. Well, I mean, like, if we say that the inflation rate is between 10 and 15% for real, then like what we're really saying is that our investment has to at least yield 10 to 15%. Otherwise, we're losing money.
Yeah.
And if I can take a mortgage at 1% and 2% and have a large amount of debt at 1 or 2%, and the real inflation rate is 10 or 12%, I will do it every time, because the bank is losing money, because the real inflation rate is this. I'm borrowing at this, and that's what they're losing.
Wow. I mean, let's slow that roll too. They're not really losing money, because they can lend out your dollar 20 times. So at 1.4%, and you know,
they're fractional reserve lending. But I'm just saying, like, if I had that dollar sitting in a bank account, in a savings account, and I didn't get any yield on it, and the inflation rate was 10 or 12%, I would be losing money.
Well, and that's what a lot of that came down to in the last video. Comments on it below was, yeah, I thought about selling my home, but you know, I have to go out and make that much more on my investments to make the difference worthwhile. So I am going to do the research on what that difference is. I don't have it today. I'm going to have to go plug in some numbers and figure that out. What type of return on investment you would need per year to make it worth your while, not to spend the capital on a home rather than have it rented. So,
well, and that's why, like, I encourage people to invest in real estate, right? I'm not a realtor or mortgage broker. It doesn't profit me in any way for you to go out and do it. I'm just saying that it's a good way for you to get yield on your money, particularly when all the things that we're talking about, the money supply is increased. There is, we've seen appreciation over that time period. Since quantitative easing has started in 2009, it hasn't stopped. And although we've heard, many times of tapering and this and that, they haven't. And so, we do have a different type of, money supply issue when it comes to injecting it directly into the economy. But I wanted to show you another chart here. And this is a chart on the savings rate in Canada.
Savings rate just went up again last month, just saying.
Yeah. So like the amount of savings that we have in this country, especially over the last year, has been huge. So, what this tells me is that there is capacity in the market in order to be able to withstand inflation. So that we have the capacity to be able to do that. That's what it's telling me. Because we have the savings that are in there, and we will have, a supply shortage as all these people come out of hiding, and we're not importing as much as we did before. Once we start to see countries open up, we see more exporting, I think we'll be able to see some of those supply shortages come back. And
that's gonna, what that's gonna lead to. I mean, we're already seeing supply shortages in vehicles, because they can't get microchips to put in like their backup cameras and stuff like that, right? Like, I have a friend who works at Land Rover, and he's like,
we're basically taking the summer off because we have no more vehicles. And like, they're not the type of vehicles that you can sell without a backup camera, right? I mean, so there's stuff like that, right? But I was going to talk that back to inflation is, I mean, with that, if that's the real number, people know that's the real number. And I know the Bank of Canada has come out and said, hey, we're not going to raise rates until we get back to full employment. And I think we're going to get raised. I think next year we're going to see rates raised quicker than we've seen in a while.
Yeah, and I'm gonna go differently on you with this one. So
That's fine. That's why you're here.
Yeah, yeah, and that's why we're friends, because I don't agree with you all the time.
Just most of the time.
Yeah. So like on this one, I would say that I don't think that they will as much as they think that they want to, because of the amount of debt that is a percentage of GDP right now.
Well,
And
that's true. They did borrow a crap ton of money. So
like if you look at the debt to GDP, I think it's above like 10%. So imagine, and that's at this interest rate. What you're saying is
are you talking deficit or debt?
Debt, the interest on the debt that we have.
Oh, the interest. Yeah. I was going to say our deficit is way over 10% of our GDP.
Yeah, for sure. But just the
like
interest on that. The interest on that is. So imagine you doubled the interest, because remember the interest is 0.25. Now you double it. So you're going to say that the government of Canada wants to have 20% of GDP? Every time they're in a pickle, man. They are in a pickle. I have swear words, but I'm going to say pickle. How about that?
Pickle's a good word.
Good.
We don't have to bleep you.
Yeah, I mean, they're in a position where I understand that like interest rates are going to, and what is the stress test? The stress test is
all right. Let's not even talk about that. We've beat that dead horse on this channel already. We don't need to keep going on that one. Okay.
Yeah, but it's called government control. Let's call it what it is.
Well, I mean, I can take you to this nice little graph here. Like, I know you want to talk about this here, so I'll take you to this graph. Look, you can see the stress test, but you see the trend line here, and it basically like broke the trend line because they brought in the stress test and people panicked, and they panic bought, and they ran the numbers up, and then it came right back to the mean, right? And now we're off the mean again because they've artificially lowered interest rates. They've increased the money supply so much that they're inflating themselves out of this debt. I don't know. I'm going to call the roaring 20s. I think now is a great time to invest in real estate. I am a real estate agent, but don't buy through me just because I say that. Buy through me because I'm beautiful. I thought you'd like that one. Again, they're in a pickle. I mean, that's a good word for that. Everybody who watches this, you're going to hear that for quite a while, because that's what I'm going to be talking about. They are in a pickle. Like, what the heck are they going to do? And who knows? I mean, it's minority government, so this could be somebody else's pickle, and maybe that's what. And I think that's some of the problem with our system is that politicians are short-term thinkers. They think, what will get me elected in my next term?
Yeah.
Beyond that, they don't care.
Yeah, they don't. And this is from Ben Rabideau, and he
can't read that. So
it says basically that the strong increase in house prices largely reflects fundamental factors, and that's from the Bank of Canada. So if that's the case, and the Bank of Canada is saying that, I don't think we have house prices too high. I think, again, you still have to come back to compared to what. And if you're talking about dollars, you're talking about something that is losing value because of inflation, and we're devaluing our dollar. So the problem is don't hold dollars, and the more dollars you hold, the less it's going to be worth over time.
Well, here's the problem. Don't put them in US dollars now, because they're devaluing faster than we are.
Yeah, like it's a race to devalue everybody's currency. right? Everybody's printing. It's not, it's an international thing.
Currency wars, currency wars.
Yeah. So I mean, like so one thing that you can do is put it into hard assets. Hard assets are, real estate, land, precious metals. You can invest in yourself, right? Education, intellectual property. There are different types. You can invest in companies, right, through the stock market or private placements, or directly into businesses. So there are other ways, but money in the bank is money leaving your, it's going away.
It's not even dead money. It's money that it's buried, that you're never going to find again. Like it's a hidden tax, right? Instead of the government coming out and saying, hey, we're going to tax everyone, they're just going to say, okay, we're going to run 10% inflation. Most people won't notice. I mean, they're going to notice, but they're not going to say, oh, that's the 10% increase in taxes, rather than just costing me more money for everything.
Yeah, and the other thing that you want to think about too, and one of the benefits of real estate too, is that you're actually leveraging, right? So you have $2, but you're leveraging $8 of the bank's money in order to be able to purchase an asset worth $10, right? So that's the idea behind real estate. And depending on the type of asset you buy, right, you are actually paying down so much more principal than you ever have in the in the history of interest rates. Like if you go back 20 or 30 years, maybe 4% of your principal is being paid off with each of your first payment. But you go back to today and it's more like 60% goes to principal, right? That's a huge difference. So not only
so maybe you're overpaying for the house, but you're paying it off quicker. Is that what you're trying to tell us?
You're paying it off quicker. Yeah, you're actually putting more principal towards each payment.
Yeah, in your opinion, we're not paying too much for houses, right? Compared to other goods and services, and people are paying those houses off quicker than ever. And I mean, I remember my parents, they bought a house for $32,000, and I'm like, why did it take you 20 years to pay off a $32,000 mortgage? And that's exactly the reason, is because when they started their $500 a month mortgage payment, like 4%, $20 a month went to paying off the mortgage. So they paid off very little at the beginning. Whereas we pay off huge amounts. We pay off 4% a year, at the beginning, at minimum.
Yeah, and I do think that wages are going to be going up tremendously. We're going to see a lot of
we're not going to, like, I don't want to get into that right now. Maybe we'll have another conversation a different day about that, because we're already running long. So I want to thank you, Quentin. I just want to sum it up again. In your opinion, house prices aren't too high.
That's right. I agree. I think that house prices aren't.
You had to get that in there.
I'm not above making sure that I have puppies in that picture, that so people can like the video. I'm not below doing that. There you go.
Those are my puppies. They're 6 months. They're a lot bigger than that now. Anyways, Quentin, thank you so much for coming on. We really appreciate it. If you guys haven't, go check out Durham REI on Facebook. Follow Q-Man on Instagram. We'll pop it down below. He's putting out tons of content right now. It's all free. He doesn't ask for anything. Just go like and follow and interact. All right.
Absolutely. And I'm buying property. Like there's no, we'll be at over $80 million of assets under management before the end of August.
Amazing. So, I got to catch up.
Yeah.
Thanks, Q-Man. Really appreciate it.
All right. No problem.
Cheers.
All right. Cheers. So I guess can you see that?
I can see that. It wasn't that 1,000 subscribers?
Yep.
Yep. There you go.
This is my favorite.
How often do you play that?
Oh no, just for this. I thought that would be hilarious.
Oh, I
I've
thought
got so
that's like
much
your,
stuff. We're gonna
I
have
thought
fun.
I thought that was your background. So,
Oh,
all
no.
right, let's get serious again. It's always a good time having Quentin on. You never know what's going to come up. I don't know, but I did tell him to keep it clean. No swearing, no talking about COVID, and no talking about Republicans. All those things get you demonetized. But no, I mean.